Good morning, traders, and welcome to Phoenix Blues Trading Update. Today is the 6th of October. I hope you're all very well today. My name's Nishal Patel. I'm going to be guiding you and giving you a quick synopsis of what's happening on the market for today. First things first, let's have a quick look at what the indexes are doing. As we see, the Asian sessions have finished up fairly high, to be fair, and the rally has kicked off. Partly that is due to the strength from the USD. We did see a spike yesterday, so I'll take you into the DX chart in a moment and just show you exactly what's happened. The States, the way they closed up was very high anyway, and then that's obviously knocked on straight onto the Asian sessions, as we can see at pretty much halfway through last night. The Nikkei was doing really well, S&P soaring as well, taking out the highs that it's seen on the previous day, and so was the Hang Seng. The knock-on effect over to the European indexes, as we've seen, pretty much is as we've seen so far this morning. They are up, and I'll just have a quick look at that in a brief moment when we have our check when we check our charts out. Quick look at the announcements for today, or the key major announcements today. We do have a holiday out in China, but the key one is trade balance, which we've already had. I'll discuss that in a brief moment, and then the fortnightly unemployment claims coming out in America. Obviously, we do have a spate of employment announcements this week. As usual, we've got the unemployment claims coming out on the Thursday before the Friday. Obviously, let's not forget this comes out fortnightly. But we did have ADP figures out yesterday, and I'm going to discuss that in a brief moment as well. So first things first, let's go over straight to our charts. The first chart I want to address and have a look at is this particular chart in question. We're having a look at a 4-hourly time frame on cable or GBP USD. As we see, and we have seen, I think if we push it back over to a daily here, what we will be able to see are these lows, and most importantly, I just contract my screen here. What we can see is we can see the low set after Brexit. So we see here towards early after, straight after, immediately after Brexit, price action and the relative value to the pound to the USD came down. It came tumbling down, and actually came down and hit this low here in very early January of 1.2, what looks to be 1.27. The low 1.2, or so I should say the high 1.27s, just below 1.28. Literally had rebounded off that. We did have some key data coming out over the last few months since Brexit that's really been supporting the sterling's claim that it should be a lot higher. Obviously, that has not materialized, and we've seen a downturn for the worse, in particularly this week. As we can see, we're falling well below that 1.28 and well into the 1.27s. In fact, we're not at the high 1.27 set by Brexit anymore. We are actually a lot further in terms of a lot further in terms of damage to sterling. Right now we are floating at 1.2711, so literally knocking on the door and coming very close, as we saw yesterday. And as we saw yesterday, that it was really knocking on the door yesterday early morning, knocking on the door and literally breaking that 2.7, going into the 2.6, going into the 2.69 area. Cause of concern. Very much so, I think. I think we've lost a lot of value on cable, and it doesn't look like it's going to subside. Let's not forget, the pressure is mounting on the relative value of sterling from the relative value of the dollar, and I think that's the next chart we're going to have a look at now. So let's have a quick look at and see how the US dollar is performing. So here we have the US dollar. We're looking at the dollar index chart. I'm just going to reduce the size of these indicators. We don't actually need them, in particularly for this chart. But let's have a look and see how the indicators did. Now, by all means, what it seems like is the USD definitely surging. As we can see, it's right now stuck at that 926, or just it has tested it already over the last couple of days, as we see on this daily time frame. Back up to that 96 level. 9626 is a key area for me. But having a look at this, we are at 9624 and knocking on that 9626 area. So definitely strengthen the USD here. That is having a knock-on effect, and as we've seen pretty much for the course of this week, we've seen a bull run in terms of the strength on the USD. And again, if we're gonna overlay it onto our other currencies, such as cable, then we're gonna see this fall even further. Now there are obvious reasons that this is going to continue to fall, and I'm sure, no doubt, that you guys will have you come up with your own ideas of what we should be looking at and how we should probably be looking at it. But for here, us at Phoenix Blue, looking at things fundamentally, what we're going to do is we're not only going to explore the technical aspects, but we're also going to explore the fundamental data coming out. And the fundamental data, including what the neighboring currencies are doing, does take a knock-on, or does have a knock-on effect onto cable here for us in the UK. So and if you want any elaboration on that, by all means, feel free to contact us, and we'll be happy to guide you through it on a one-on-one basis, where we can teach it to you appropriately. But moving on forward, I think another big talking point is the value of gold. Now, as we've seen here, just looking at this on the daily time frame, the value of gold has come below this 200 moving average here, as we can see. Coming down and floating below that 265 level, coming very close to that 263. In fact, we've got relative value after the movement on Tuesday evening. We saw this tumbling down and coming back to its lows of that 263, high 263s level, floating at 264. In fact, we've just broken it right now, so there you are. Probably expecting it to take out also its low that was set yesterday. Tested my daily pivot level, coming down to my S1 level. So the relative value on gold per troy ounce is falling as well. We've seen movement from investors and how they would like to have their investments diversified. We've definitely seen a shift from the value of certain safe havens. On the flip side of things, I'm going to show you one in a moment that is doing really, really well. But before I do that, I just want to show you something here on gold. I'm just going to flick over to a weekly time frame right now, and all I'm going to do is I'm simply going to take my swing low to swing high, using my Fibonacci retracement, just showing you how the market is moving down on this time frame. As we can see price action fluctuating between the levels, but flicking down the time frame here, what we can see is how it has done. And after breaking my 23.6, we have literally come straight down to the 618, and that's where we see the daily right now. Stopped briefly in its tracks, stopped briefly in its tracks at my 618. Price action has literally come off that level and has tested it a number of times already. So, in terms of indication of where it's going, I think that gives a very, very firm idea of how it's going, how it's definitely going there. Has missed my retrace, has missed my retest of my 50% fib level before it goes down, but then we can see it plummet, and looks to continue to head that way. Moving on to another safe haven, one that's climbed back really well, is the yen. Having a look at it right now, floating at 103.69 circa. is coming off, and I've drawn a couple of very simple trend lines, which I'm sure many of you and all of you should be able to do with absolute ease on this daily time frame. Just literally taking some lows and highs, just dissecting my chart, just seeing how price action is forming. And what we've seen today is we've seen price action literally come up, test the low of this trend line, and head straight back up again. Definitely forming straight out of this. Let's not forget where we expect it to go to. Right now, it's back to those 103 levels. I'm sure that there are going to be a lot of traders coming in onto this and looking to potentially trade this short again. Now, that being said, I wouldn't urge you to trade it if you don't know what you're doing. Please make sure you've got a firm hypothesis of potentially why you're getting into this and how. But leaving that to a side, moving on forward, I think the next state of affairs will look at the euro. Now, euro here on the daily time frame, as we can see, it hasn't really done much, and there's a lot riding on the euro right now, especially with the ECB announcing that they are effectively tapering down their bond program. Let's not forget that was to the value, or to the huge value of around 80 billion euros, and it's already been announced that they're going to be looking to taper this off. So effectively, the value is holding, and it's not falling like a lot of other currencies are relative to the USD. We also have to remember that the eurozone are making, and especially out with their bonds, they are making some progressions with the bond buying program, but it really has been, and this is why we've pretty much seen a flat line in the euro recently, is I think a lot of pressure is on Deutsche Bank, especially from what we saw just under a week ago last Friday, and people are expecting or looking at Deutsche and its relative stability to give us an indication of how we expect euro to pan out. With that being said, I think there was a lot, many people, in fact, many traders and investors were looking to short the euro come Monday morning, especially with what happened with Deutsche Bank on last Friday. But with the ECB announcing a tapering system, or a cutback, effectively what we've seen is a sideline on this. So not really too much play with the euro. Something I definitely have been avoiding the whole of this week. Moving on swiftly, I'm just going to have a quick look at the Australian dollar. The Australian dollar has been moving. This is an hourly time frame. I think what we're going to do is just move it straight onto the daily time frame. What we've seen is these lower lows and lower highs kicking off towards the end of September. Coming back, price action is trailing at 0.756, say, just on that 50 moving average on my daily time frame. Looks set to carry on going. I think with the Kiwi as well, looking at its closest neighbour and seeing how that's faring, and let's have a look at this as well. Coming off these levels of support and resistance, especially after making this formation, and many of you probably may not be able to see it too clearly, but what we've got a clear lower high after a higher high, giving us this second shoulder. So it would give us a head and shoulders here. So we've got a shoulder, head, shoulder, taking out the neckline. It's also evident and visible on a smaller time frame, so many of you will be able to see it on a smaller time frame. But what we've seen is a retest of that neckline. So I can draw it here. Retest and looking to go the opposite way right now, as we see. Break and retest, so looking quite good realistically. This is looking to go short as well. Has fallen already, has made a fair movement in the last 3 days alone. I'm just gonna have a look from its open here. We're looking at around 100 odd pips, so a fair bit of movement on the Kiwi here on this daily time frame. Has seen a fair move so far. Now, there are many ways into this trade if it is going to carry on going. But what I would tell many of you, especially is the fact it's coming into an area of support right now. We've got this dynamic area of support set out by this 100 moving average on this daily time frame. We should probably see a pullback or a correction of some kind, maybe even retesting of this neckline that we've got here. Probably slightly adjust this neckline as well. I have drawn it fairly quickly, so we probably look to make it in and around. Let's just do this really nicely. Remember, neckline should be encompassing as many of the lows through our head and shoulders as possible. So looking in and around potentially where this 50 moving average is coming down to, and a retest of this area here. It looks like a viable entry in for those people that have missed an entry onto this. Is 72.93, coming close to that 73 area. I'd say big round number there. A big juicy number that I know a lot of traders will look to avoid when it gets to that number. So potentially seeing a rejection off that price and that neckline and a retest may potentially be a way in for many of you guys. As I said, it's sitting on a dynamic area of support and resistance right now. I'm just going to check and see if we've got any horizontals and see any confluence in that area. I've got some touches and some highs and lows. Probably worth a bit more in terms of an inspection. Looking back on this right now, we do also have on this weekly time frame, we do see a number of moving averages. Close to the low of this week's bar, which tells me there must be a horizontal close, because the larger moving averages obviously tend to look at this price despite the weighting going on towards the end of these bars, because they are exponential. But what we probably will see is an area of support and resistance close to that 71.58 area, probably just below that. I would probably say around here is better. The 71, definitely between 71.40 and 71.50 there. So probably don't want to be selling into support. And for those novice traders, please be careful. Don't do that. Don't do that too quickly. It will be the end of your trade very quick, and maybe the end of your trading account. So be wary. Find a good way in and then go. Quick check. I did say around 100 pips. I just want to make sure that was around right. Yeah, no, that's about right now. Just over that, I would say. So doing fairly well at present. Probably seeing the greatest movement coming. But let's not forget what we're expecting. We're expecting non-farm payroll tomorrow. We did have ADP figures out already. And ADP figures have come in lower than expected, but let's not forget, we're not going to base non-farm just on that. Non-farm change is based, and realistically the volatility we're going to see is the difference from the actual figures to the expected figures that we saw yesterday. So the movement really is going to come off that. We are expecting an increase on those figures, and because of the ADP figures being so low, I think any kind of increase on those figures and anywhere close to actual figures, I think what we'll most likely see is we'll see a lot more strength into the dollar. If that is to continue, let's not forget, if we do see that strength into the dollar again, I think we are back in firm grounds for the Fed to make the final, and it literally is their final opportunity this year, towards the end of this year, to make a rate announcement or a rate judgment. But I think what we should also be looking for is looking for any clues that they may give us to any other further hikes that may be coming next year. If there's any indication that there may be a further hike coming next year, I think the markets are going to rally to that, and they're going to definitely follow suit. So that really is a key talking point. But if this data continues, and the strength of this data continues out stateside, we are going to see a high degree of dollar strength. Now, finishing off this morning's update, just having a look at WTI right now. Having a look at WTI for a number of reasons. Just going to remove this fib off my chart right now. I'm drawn on for a another delegate that I was coaching, but just having a look at where price action is has come up to that $50 area, as we see, came up and hit this high. We are looking at 4 hourly time frames, so has come up and hit this high of 50.30 over the course of the last day or so, and literally has bounced back off it. I don't think any trader or any market investor expects the price of oil to exceed that $50 mark. Let's not forget the value of substitutes that can come in and the cost of those substitutes. So to make oil still attractive onto the market, I think that $50 a barrel will probably stay true. More so, particularly for what has happened with OPEC, and also what Saudi have recently announced on their prices of exports out to Asia. So I think all of this is tying in together. Probably expect to bounce off that 50 as we've already seen. Probably expect it to come down a bit further. Want to see how the dollar pans up before I look to trade this aggressively. Let's not forget any commodity that you're wishing to trade is traded in the value in USD, so it will have a relative impact. Okay, guys, that's me for today. Hope you've enjoyed today's morning update. This is Nishal Patel signing up for Phoenix Blue. Until next time, happy trading, guys. Take care. Goodbye.